What's good, everybody? Today is July 21st. In this video, we're going to be going over the price action from the entire day. We're going to be looking at why today, in my opinion, was not the best day to trade, how to recognize these market conditions like I do, the only potential setup that I thought maybe looked good and it was pre-market, and then finally, we're going to be going over exactly how I look at the markets that gives me clarity in my strategy and in my psychology. So without further ado, let's go. All right, so I'm gonna just hop on, clear up the charts, and then we'll go over exactly what our bias was going into the morning and then also what we saw going into open. So y'all boys know I always start on that weekly chart, always mark out that previous weekly high. That is our weekly objective, especially in these super bullish times, right? And then I always make sure to just quickly, right when I get on the charts, zoom from weekly to daily, check out what do we have on the daily. We have this target lower right here. We could potentially want to see a retracement into this daily for value gap. Zoom into the 4 hour, there's not really much extra to analyze here. Price action isn't the clearest here, right? So zoom down to the hourly, and here we start to see something, right? So we see our weekly high right here. We see SMT at these highs. Don't really care about that. I'm just caring about how we looked going into the morning, right? So NQ opens during the morning after already making a change to the state here and then pushing past this series of up close candles. So we now have extra order block confirmation right here, right? Let's mark this level as what we expect to see hold a support, right? Now looking at ES, we have a similar thing, except we didn't close below this candle, so this is not a valid change in the state. However, zoom down to even a 15-minute time frame, shows that we are disrespecting order flow right here by closing through all these candles, all these fair value gaps, not using any of these lows as a potential support level to bounce from, and combined with NQ looking super bearish, we can then expect to see this play out as an early morning short model, right? In my opinion, this looks super clean to see it open, maybe do something like this, right? Where we would have seen open, sit right here, do a little bit of movement, come back up, break to the downside, and then come down to take this, tap into this daily fair value gap to set us up for the rest of the week to make a slow grind to that upside right there. So what happened instead? Well, going into open, we ended up pushing and hitting this 4 hour fair value gap that was right to the left of us here. So we'll zoom out. 4 hour fair value gap, and if we look at the 4 hour, one thing to note here is that the 4 hour is still very bullish. There is no bearish order flow or no disrespect of bullish order flow, except this little potential push lower that closed below these candles. However, if we look, we just pushed right back into a fair value gap, and we also pushed back into daily order flow. So in my opinion, there's no real reason to look at this and say, okay, now we are bearish. So like I said, we tapped into this 4 hour fair value gap, still respecting 4 hour order flow. Zooming lower to say the 15-minute. If we look right here, we ended up actually making an SMT right at this fair value gap. So why does this matter so much, and why would I not care about an SMT really anywhere else on the chart except right here? Well, the whole reason that SMTs are great is because they happen in an area in which we expect to reject. So what does that mean? Where do you want to see price push to and then bounce off of? Say it could be a fair value gap, say it's a high, whatever it might be, whatever your confluence is that you want to see price push into, bounce off of, or then draw towards, right? If you go to an area which we expect to reject or bounce out of and you see an SMT there, that is the only time in which you should care about SMTs, and that is why they are so effective when we see them in these areas. So zooming into open, on the 5-minute, we ended up coming down. Right when we get into this area, we place in this external SMT and we start to sit here and just kind of play around, right? We kind of start to slow down, right? Which shows us, okay, we might want to respect that 4 hour bullish order flow. However, to me, this model still looks overwhelmingly bearish, right? Let's zoom in. The 1 minute after making that internal SMT comes in and places it, or external SMT comes in and places an internal SMT, right? It's the same exact thing right here. So if we look, ES ends up making equal lows, NQ ends up taking these lows and making a 3 drives pattern right here. Why do we care about this? It's always a good thing to see this 3 drives pattern, because this is a way that the market can go ahead and generate liquidity for itself, right? So we look, the 3 drives pattern is literally just simple. It's we're at an area, so say we expect to reject right here. Price is pushing lower. What we see is a push lower, tap in once, tap in again, boom. And it really doesn't matter what these highs do, unless we break it with displacement that we don't expect to all the way come back down and continue that 3 drives pattern. Usually we can sweep this higher, just continue doing this. And once we see these 3 get put in, we'll usually see a push. And then if we don't see the push, we can just expect this to usually be inefficient and kind of sit on here for a while before it ends up either making the push or just dropping lower. So that's the 3 drives pattern. That's how I use it, right? So we end up seeing that right here, SMT put in. Now this is pre-market. That's why I did not take this trade. There's 2 reasons. Number 1, we're against what I assume to be the draw. we're also going to be longing into a bearish imbalance. So we risk just taking this trade to be a rebalance to price, a quick rebalance, then just going and stopping us out. And as well, this is pre-market. So we could expect the market to maybe push, maybe go in our favor, maybe do something, and just use all of this as generated liquidity for open to come manipulate and then do what it wants to do, right? So we risk all three of those things happening. However, the one way I do think this trade was okay to take is if you did this, right? This is what I was marking out pre-market, right? And I saw a lot of other people take this too. So I did is I zoomed out and I said, okay, if price wants to push higher, like we're displacing here. So if price wants to push higher, where is it going to go to, right? So let's zoom out. 15-minute imbalance sitting right here. Okay, we could potentially go there. 1 hour, we really don't have imbalances. So I'm going to market this 15-minute imbalance. Looks clean to me, right? Maybe look at the 5-minute imbalance too. Really, I liked this one the most. And then as well, let's see, where could price want to rebalance to? Maybe equilibrium of a range, something like that. The cleanest range for us, in my opinion, would have been drawn from up here all the way to down here, right? So that puts 0.5 of this range, equilibrium, right in line with the 50% level of this fair value gap. Now, I typically don't use levels on fair value gaps. A lot of people split them into quarters, halves. I really don't like a lot of that, but I do recognize that a lot of times that 50% level is key to a lot of kind of understanding the strength or the narrative of a fair value gap, right? The final thing that I think added to this and made this a high quality drawn liquidity, like I talked about in previous videos, is this. Throw in the fib, the standard deviation projection, and you see 2 lining relatively high and perfectly with this draw, right? Now, if you look, price hits both of these, but it just taps into that 2 level. That shows me that this is efficient level of finding a good draw on liquidity because we have these 3 things aligned and we know that this is an area which price could potentially want to pull towards, right? So we protect ourselves by taking the trade like this, which I think this was the only valid way to take the trade in my opinion. Taking it to this 2 level or equilibrium, and then you can place your stop here, which is what I would have done, or I mean if you really wanted to, you can place down here for 1.4. I think this is a worth the trade though, because if price is going to come down, it's not going to come all the way down to here, stop you out, and then go. Because at that point, we'd be touching inconsequent encroachment. And if price moves that low, I don't think we're going to be rocketing up, right? So we take this trade, it gets hit right before market open. Why was it not a good idea to hold and just capture this huge move? Well, let's look. Like we talked about before, we're in a huge 1 hour bearish market maker sell model. This is the start of it perfectly. We see this happen day after day. So why should this time be any different, right? Well, let's look. The only reason that we could have bullish order flow is because we have a new week opening gap right here. We have a 4-hour imbalance, 1 hour imbalance, volume imbalance, whatever you want to call it. That's the only reason why we could maybe expect to have this kind of order flow in the morning, right? However, everything is staying overwhelmingly short. We have a daily fair value gap below us. We have high draw on liquidity. We have good generated liquidity on the downside and not really all too much on the top, except after we run through this imbalance, right? After we run through this imbalance, it's all generating liquidity from here, right? So market opens, goes ahead and just completely runs, just literally completely runs for the rest of the day. And now if you would have held this like a badass, you could have bagged an insane R in the morning or holding it till later. Like, I don't even want to talk about the possibilities here. But I think this is overwhelmingly fantasy to think that you would have taken this or you could have taken this trade, because in my opinion, this was an absolute snipe from the bottom that was only validated because of 2 confluences against the whole rest of confluences. So for me, this was a no trade day. I did not see my model. I did not see anything that I liked. And because of that, I'm completely fine just stepping away. No problem. So price in the morning just completely pumps, and then watch this. Right when we hit this level, right, we sit and consolidate. What is so good about this level? What is so crazy about this level? Let's look, where can we figure out where this level comes from? Let's draw something in here. A little bit of standard deviation is always my favorite. Right in between 2 to 2.5, we hit it and we just sit here. Now, usually what we expect to see happen is we expect to see a push into 2 to 2.5, and then we expect to see pull back to equilibrium and then a continuation, right? That's only if price is extremely bullish and it still has efficiency left in it. At this point, we had already pumped, I don't even know how much this is, and then we just decided to sit here, right? This is because the objective had been taken. How do I know this is the objective? Well, to be quite honest, I don't know what price wants to do at all times. And because of that, thankfully, I don't have to trade it at all times. Because since I don't have to trade, I don't have to know what price is doing at all times. I can literally just step away because I don't know what price wants to do after it pumps this much. There's no point in me sitting here watching it, trying to take trades trying to take shorts all the way back down here, like that's probably one of the dumbest things you could ever do. Why would price pump this much in the morning to just drop this much again? So the best course of action here is to simply watch and use this as a data tape read. See, what can we learn about how we can trade price and what price actually does? Well, let's look. Price hit 2 to 2.5 and then it sits here and consolidates. It's because the objective had been taken. We can expect price to act inefficient after it takes its objective. We already came down, we took all this liquidity and we pushed higher. There's really no targets left for the day. What I need to see to take a trade tomorrow is I need to see a lot of action being built, potential manipulation, displacement back lower, and then we can open the day somewhere around here, or even somewhere up here wouldn't be bad, somewhere up here. But if we're depending on what the overnight structure looks like, it could potentially validate us for a trade tomorrow or just simply a no trade and just a watch day. We really have to be completely insane about how accurately we have to apply our system. Okay, let's get into what I was going to talk about earlier, about the way that I see the markets and how it gives me clarity. When I'm watching the market in the morning and I see this huge move start, I'm not sitting here like, oh my gosh, it's moving higher, it's moving higher. How do I get in? How do I get in? Where's my entry? Where's my entry? I simply just don't care, because what I'm looking for is not what the market is doing right now, what it's like, where is it going to move? Where do I think it's going to move? How can I get in? It's not what I'm caring about. I'm caring about where is my entry? Where is my pattern? Where is my system? How can I apply my system? The only thing that when I see at this point in price action, with all the rest of this to the left of us gone, so at this point, all I'm looking for is I'm looking to see, okay, does price want to maybe slow down and then come back, tap me, and then we can make a trade to the upside right here. We can trade this internal model, because this is what I would trade. My trade would be somewhere right around here, taking this internal model and then taking this external model. That would be my trade. And I'm not forcing anything because my trade is not there. And the way that we start to see the market like this and how we can actually use this thinking to our advantage is because we gain complete peace in the fact that we don't have to sit here and work every single day to find trades, because we don't find the trades. We're not digging for the trades. We're letting them come to us. I'm simply waiting. I'm like, does the market want to make this pattern? No? Okay, I'm stepped away, bro. I'm truly stepped away. Because there's no, my system's not here. There's no reason for me to get in a trade, because then I'm just a gambler. We're not gamblers. We are the house. We have to apply our system. We have to be worried about making sure that we're a confident and great executor of our system. And that's all that matters. That is all that matters. So I hope you guys learned something from today. Really apply the way that I think. I don't look at what the market's doing, what I could have done, what I could have made. I just simply sit here and see, where could my system come from? Where can I apply my system? What would the market have to do right now to then allow me to take a trade? If the market doesn't do it, am I going to take a trade? No. Like, you guys know this stuff, but you just don't do it. It's really the one thing that'll actually give you success and profitability in this game is just doing what you know you should do. And it's so funny because trading is literally an anomaly. I thought about this earlier. Trading is an anomaly. Like, the more we work, the more we put time into this, the more awareness and knowledge we gain, the more it boosts our ego and our pride and makes us want to work harder, find trades, think we know what the market's going to do. When in reality, we just must leave it to our system to take care of the job for us. We just have to be executors of the system. And if that makes you feel a way of like you relinquish control, great, because we all need to relinquish control of our lives. We all need to get rid of our ego pride that we did it. It's all us. It's not where you need to be. It's not how you need to think. You need to understand that trading will take care of itself if you let it. That's it. That's truly it. Trading will take care of itself if you let it. And if you give it that space in your life to let it take care of itself, where you put in work to understand what you need to understand, and every single day you come in with a ferocious discipline to make sure that you are only going to do what you know is right, what you know is exactly in line with your system, then you will succeed in this game, and that's it. There's really nothing more to it. So thank you all for watching, and I hope you guys learned something. If you have any comments, just drop them in there, and I'll be first to answer. Thank you boys for listening. I'll catch you all later. Peace out.